Every Bitcoin to gold bear cycle in the last decade has lasted exactly 396 days. The last one just ended this month.
And that puts us on the opposite sides of the desk. Because if the signal is right, it's time to trim gold. If it's wrong, you rotate into a knife.
In the next 5 minutes, I'll show you the exact cycle proof, gold's weakness, and the one level that is key to Bitcoin.
If you are still holding gold at all-time highs without knowing this cycle just split, you are about to find the hard way.
Quick frame first. The Bitcoin to gold ratio is simply Bitcoin's price divided by gold's price. It tells you which one is winning, not which one is rising. And that ratio has completed a move that has repeated to the day for 10 years. Look at every bear cycle since 2014. It lasts exactly 396 days. Not approximately, exactly. This ratio peaked in January 2025 and in March it has completed exactly 396 days. Credit to trading short on Binance Square for catching the symmetry. But what's important and makes it more than a coincidence is actually what's happening underneath. The monthly CCI just bounced off the same lower lows trend line that has marked every single bottom going back to 2015. And on top of that, the ratio printed a bearish cross between the one-day MA200 and the one-week MA50. That's the exact same cross that appeared in November 2022, right at the bottom of the previous bear market. Post the November 2022 cross, Bitcoin entered a bearish phase that lasted several months, followed by an eventual recovery in late 2024.
Before everyone rushes to sell gold, read this carefully. This ratio is about relative performance. It does not mean that gold has to crash. It means Bitcoin may fall slowly than gold or rise faster. That is a rotation signal, not a sell everything alarm. Now here's what nobody is saying clearly. Gold has been crashing during a Middle East conflict. With oil near $100, with inflation running hot, gold was supposed to be the safe haven. It hasn't been. And that is the most important sentence in this video. Gold's biggest driver is not geopolitics, it's interest rates. Central banks flagged hot inflation as the main risk last month. The energy shock from war reshaped the macro picture. Rates are expected to stay higher for longer, and some members openly talking about hikes. Any hint on a rate hike is toxic for non-yielding assets like gold. There is a structural shift. Gold stopped being a safe haven and became a currency debasement trade. That trade drove the biggest gold rally in history. Since the US and Israel attacked Iran, that trade has reversed. Investors are selling gold for liquidity, to cover losses, to fund energy costs, and to manage capital stress. If you look at the daily chart, gold continues to trade below the 50-day simple moving average. The March 25th and April 13th bearish crossovers are still in play. Relative strength index is neutral just above 50. Gold bounced off the 200-day simple moving average, then near $4,100 after selling off from the $5,000 area. But that bounce is not a buy signal. Medium term, this is a sell-on bounce market.
Bitcoin is the other half of the trade, and the picture just improved. Bitcoin has been range-bound between $60,000 and $75,000 since February. The king crypto has been consolidating, range-bound, defensive. K33 researchers called it consolidated range-bound action in Bitcoin. Then Trump announced a 2-week ceasefire on Iran on April 7. Bitcoin responded in the same session. It was up 4%, closing at 71,934. It reclaimed the 50-day EMA at 70,300 as dynamic support. And since then, Bitcoin has climbed to a peak of $76,000, Currently, the King crypto is consolidating around $73,000. The trigger I'm watching is a weekly close above the $74,000 level. The next key resistance for Bitcoin is the $75,000 level, and a weekly close below 74 would mean that it does not confirm the rotation. It is a headline pop and not a trend.
I will push back a bit. The ceasefire is just for 2 weeks, not a resolution. After Islamabad talks broke down, gold did get its safe haven bid back overnight. But the market optimism has returned as doors remain open for diplomacy. So, anyone rotating has to be watching those headlines as closely as the chart.
So the desk is split. I'm calling rotation and Dhwani is calling patience. Are you bullish on Bitcoin or bearish and will stay in gold? Let us know in the comments. We read them.
Practical version. This is a trim and rotate, not a dump. If you are sitting on outsized gold gains from the multi-year run, take some off. Do not liquidate.
My view is simple. If BTC sees a weekly close above $74,000, then move or rotate a measured slice of your gold profits into Bitcoin. But if Bitcoin fails to close above that level or it drops back under $70,000, stand down and wait. Invalidation for the whole rotation is a weekly close under $68,000 level. What's the time horizon, you ask? Typically 6 to 12 months from the signal. Historically, after every 396-day cycle, the ratio has rallied 700%. But you do not need to go all in. A measured slice of profits will carefully capture the asymmetry.
3 things to remember. 1. The 396-day Bitcoin to gold bear cycle has completed with precision. 2. Gold is weak for interest rate reasons, not war-related reasons. The current setup is sell on bounce.
3. A weekly close above $74,000 confirms a rotation. Below, you wait. Do your own research, manage your risk, and do not let headlines drive you to panic and make decisions.
For deeper gold and Bitcoin breakdowns, hit subscribe. The next one is already in the pipeline.